Hello investors, welcome to Simpli Stocks. In the past 5 years, Radico Khaitan has given a massive 600% rally which translates into 48 to 50% CAGR return. Similarly, in Picaddilly Agro Industries, there has been a phase in this business when it rallied from just 40-50 rupees levels all the way up to 900-950 levels in just a period of 2 years from 2023 to 2024. In both these alcohol businesses, the same thing happened, which is premiumization. Radico and Piccadilly launched their premium expensive alcohols, because of which both saw very good growth in sales, and along with that their margins also expanded. So in net profit or bottom line, even better growth came. Like for Piccadilly, their Indri whiskey has been a super hit. As you can see here in this screenshot, in FY22 and FY23, Piccadilly's operating profit margin used to be 10 to 12%, which the very next year in FY24 increased straight to 18.4%. Last year, that is in FY25, the margin stood at 21.6%. In the same direction, Piccadilly's net profit also became 4 times, from 25 CR in FY23 to 105 CR in FY25. Similarly, if you look at Radico Khaitan, this business in the past 5 years has been growing its sales consistently at 15% CAGR, whereas United Breweries and United Spirits sales growth has been only at 5%. If you follow Radico, you would know that in its premium category alcohols, it has been working heavily on Rampur and Royal Ranthambore whiskies, Jaisalmer gin and Morpheus brandy. What is happening is that in your mass market alcohol segment, there is not much growth. That is why you will see both United Breweries and United Spirits have gone out of trend. But in the segment of premium expensive alcohols, very good growth is coming right now. People are slowly shifting to expensive alcohol. Here the demand is very strong. Now the same premiumization story is repeating in 2 more small cap alcohol companies. These 2 companies also, just like Radico and Piccadilly, are entering into the expensive luxury alcohol segment and are following the same playbook. So in today's video, we will study these 2 small cap alcohol businesses and we will see what learnings and opportunities there are for us. The first business we will study is Tilaknagar Industries. Tilaknagar is known for its Mansion House brandy and Blue Lagoon gin. 90% of their sales come only from brandy. They are more focused in South India. South contributes to, I think, 85% of their sales, and most of their sales come from Andhra Pradesh, Telangana, Karnataka, Kerala, Tamil Nadu and Pondicherry. Remember this state presence point. I'll tell you its importance later. Now, till now, Tilaknagar has been catering to the mass market. Between 2015 and 2020, this company was in heavy losses and even went bankrupt. Then it saw restructuring in 2022 and 2023. It saw good growth, but last year its volume growth completely evaporated. You can also see in this screenshot. But over the last 2 quarters, Tilaknagar has been showing good results. In January to March months, sales increased by 13% compared to last year. Then in the months of April to June, 31% growth came. In the June quarter, they received a subsidy of 39 CR. Even if we remove that, still a very good 26.5% volume growth was there in Tilaknagar. Karnataka and Andhra Pradesh are their 2 biggest markets, and in both, policy changes have happened from which they have benefited. In Andhra Pradesh, the entire distribution system has been changed, and in Karnataka, excise duty, or in a way, tax was reduced. Because of this, sales increased. So I gave you a broad overview of Tilaknagar about what has been happening in the business. Now the trigger going forward in Tilaknagar is that they have bought the famous Imperial Blue brand from Pernod Ricard. Imperial Blue is a whiskey. You might have seen their ads to the Men Will Be Men series, which are quite funny. Tilaknagar has bought this business from Pernod Ricard for 4,150 crore rupees. Imperial or IB has 9% share in India's whiskey market and is present in 27 states and union territories. Through Imperial, Tilaknagar will be getting entry into other states where they are currently not present. You see, alcohol is a highly regulated sector. At every stage, from production to distribution, then sale, different states have different laws and a lot of licenses are required. So it is not that easy to enter into new markets. So here, Tilaknagar will get a big advantage. And more than that, the biggest advantage Tilaknagar will get is that they will get an entry into the premium segment. Currently, this is the biggest trigger in Tilaknagar. They will be able to improve margins in IB whiskey and in the future maybe launch other luxury brands under it as well. Last year, Tilaknagar sales were 1400 crore rupees approx and Imperial Blues were 3000 crore, meaning sales wise IB is double the size of Tilaknagar. After the acquisition, their focus will remain on improving EBITDA margins in IB. Currently, they have a network of 4 owned and 17 contract manufacturing units, in which 14 of IB's contract manufacturing and to their own. Total 16 facilities will be added. This is quite a big acquisition. So for this, Tilaknagar will be raising 2,300 crore rupees funding by issuing preference equity. This acquisition and integration will take around 4 to 6 months of time. And then the benefits from this acquisition will also take time to show in Tilaknagar's results. So if you are interested in Tilaknagar, you'll have to have a long-term mindset. In my understanding, FY27 and FY28, these 2 years will be the most crucial for this business. It takes time for this premiumization journey to play out. Building a new brand, then scaling it up takes time. In Tilaknagar's case, they will be acquiring IB, scaling it up, improving margins. So that will also take time. And alcohol business is anyway a very competitive and regulated market in India. So you won't see value unlocking happening very immediately. But Radico and Piccadilly's performance are two very strong cases that tell us that what we can expect here if everything goes according to the plan. Now, talking about growth in their own business, management this year has estimated mid to mid-teen growth, that is 15 to 17.5% sales growth, and then next year has given guidance of mid-teens, meaning around 15% sales growth. Apart from this, they have talked about EBITDA margin increasing from 15 to 17%. This business is currently trading at a PE of 33. You can study it yourself. And I know I keep saying this and you don't listen, but still, as a humble request, if you are liking this video, then do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and also subscribe to our channel as well. Now coming back to our businesses, the second business we will study is Allied Blenders and Distilleries. Officer's Choice and Sterling Reserve are Allied's two very famous whiskey brands. Apart from this, 2 years ago they launched Iconic Whiskey, which became quite a hit and brought good sales growth for them. They will be scaling this up further. Apart from this, they have launched many new products in their super premium to luxury portfolio. You will see that their mass market to semi-premium range is between 840 rupees to 1050 rupees. Their super premium range starts from 2400 and goes all the way up to 5300 rupees per bottle, in which they have launched many new products like Russian Standard Vodka, Zoya Gin, Woodburn's whiskey. If I give you an idea of the importance of expensive alcohols, then just 1% volume growth in them equals to 10% sales growth. That is why Radico's, Tilaknagar's or ABD's management is so highly bullish on expensive alcohols. Now, if you notice, Allied Blenders' portfolio is mainly of whiskies, and with the acquisition of Imperial Blue, Tilaknagar will also get a big whiskey portfolio. In India, whiskey is the largest alcohol segment. Whiskies have had a 60 to 65% share. After that, around 30% share belongs to brown spirits, which is brandy and rum, and 5% share is of white spirits, which include vodka, gin, and tequila. Now, let us look at Allied Blenders' recent performance and future plans. In Q1, their sales increased 22.5% from last year. Volume growth was around 17%, in which they benefited from policy changes in Andhra Pradesh and Delhi. Otherwise, volume growth would have been around 13%. In this, their expensive alcohol segment has seen a very good growth of 46%. For the next 2 to 3 years, ABD will target mid-teen sales growth, meaning 14 to 16% growth at the consolidated level. Apart from this, they are doing a capex of 525 crore rupees to increase their ENA, malt, and PET bottles manufacturing capacity. ENA is in a way raw material for alcohol companies. So with this capacity expansion or addition, their margins will improve. Currently, they source EMA, some part of it from outside. At present, Allied's EBITDA margins are around 13%, 12.8%, and their target is to increase this to above 17% by FY28. This 4% margin improvement will be a big boost to their profitability. Here, around 2% contribution will also come from the recent free trade agreement done with the UK, because of which Scotch whiskey will become cheaper in India. Scotch whiskey is used as a raw material in expensive alcohols. We will get to see that benefit from Q4 onwards. Currently, their ROCE is around 17%, which they are targeting to increase to 23 to 25%. So roughly, if we assume 15% sales growth in ABD along with 4 to 5% margin expansion, then we can easily see more than 25% CAGR growth in their bottom line or net profit. So ABD can also be a very good premium bet which you can study on your own. Now, in the end, before ending this conversation, let us do a short comparative analysis. In FY25, Radico Khaitan had a net profit of around 345 CR and its market cap is around 38,000 crore. It trades at a PE of 95. Allied Blenders declared a net profit of 195 crore last year. This business is currently at a PE of 57 and its market cap is 14,000 crore. So if Allied successfully follows this premiumization journey, then along with sales and profit growth, we will also see PE expansion happening over here. The market will start giving ABD also a premium PE compared to, let us say, Radico Khaitan. Now you tell me in the comments, out of these two, on which alcohol business are you most bullish? And along with that, if you like this video, then please give me a thumbs up. Also, you can subscribe to our channel Simply Stock. This way, you will keep getting updates easily of all our new videos. I'll see you in the next video. Happy investing.